It's been another insane year for Canada's housing market. And more recently, a rush to purchase homes before Canada's interest rates go up next year is further boosting demand. With prices already sky high, as of October compared to a year ago, prices are up 18%. This extra froth in the housing market that everyone keeps talking about just keeps getting frothier. And right now it's primarily driven by investors who have that belief that prices will keep going up no matter what the situation is. That's exactly why the Bank of Canada has issued a warning to investors, to home buyers, that there is a risk of a correction within Canada's housing market. And they didn't just say there's a risk of correction, there is an increased risk of correction. There's a difference. So what will 2022 have in store for Canadian homeowners, first-time home buyers, sellers, and renters all alike? Well, let's find out. According to a poll from Reuters, Canada's housing increases that has gone up by double digits is about to lose steam next year. However, when it comes to housing affordability, I can say with almost certainty that I don't think that is going to get better anytime soon or in 2022. And likely, it's only going to get worse in Canada's hottest property markets. Even with interest rates coming up next year, housing affordability is unlikely to improve next year as prices keep going higher and higher. There is one scenario where interest rate increases can potentially shake things up a bit. 1 or 2 rate increases probably may not have that impact that we're all hoping for, or not hoping for. If we start to see 4 or 5 rate increases next year in quick succession, this should take some demand out of the market, especially for rate-sensitive investors. Those investors who are highly leveraged, increasing interest rates will have a major impact on their cash flows. For many first-time homebuyers, prices have gone up so much that they've simply climbed out of reach, and a major supply shortage has only made things worse. Investors, house flippers, and speculators, who according to the Bank of Canada, have accounted for more than 20% of all home purchases. This has forced a severe supply-demand imbalance in our market. This has just increases prices even higher and has made our housing market vulnerable to either a major crash or at least a correction. Looking at 2022, out-of-reach housing prices will only push more and more Canadians to rentals, especially if you have to live close to where you work. However, people who can work remotely will simply move out of those high expensive urban areas and they will just drive until they can qualify. Household debts have gone up severely because of ultra low interest rates, and when these borrowing costs go up next year, this will have a severe impact on households managing their budgets, managing their debt payments. Another scenario that's being tossed around recently is that prices are expected to rise even further, up to 20% in 2022. You might be thinking that you live in an area that has already seen massive price increases. How much higher can these prices really go? And if this report turns out to be true, then you'll see another year of excessive price growth. Forget about interest rates. RE/MAX, one of Canada's largest real estate brokerage firms, is forecasting price growth of up to 20% over the next 12 months across the country. They're expecting most of that growth to come out of smaller markets that have already seen massive price gains. For example, they're forecasting Muskoka to go up another 30% in 2022, and that's already on top of the 20% growth that came in 2021. Moncton is expected to rise another 27% in 2022. Compared to that, to a 20% growth we saw in 2021. Barrie is expected to see the largest gains in the country with forecasted growth of 53% compared to 15% just in 2021. You know, it's funny, every time I look at these stats, I have to remind myself that I'm talking about residential real estate, because you could be easily mistaken these stats for some sort of like high-flying growth stock. Now to benchmark these rates, let's talk about Toronto and Vancouver. What are they expecting to see in 2022? Considering these are the 2 largest property markets in all of Canada. Toronto is expected to go up a modest 7%, while Vancouver is expected to go up 13%. In my opinion, this real estate forecast by RE/MAX does seem a little ambitious, especially when you consider the interest rate environment that's about to hit us. Falling interest rates has been the major driver when it comes to the price growth we've seen in residential real estate. But in 2022, that's all about to change as interest rates are expected to go up. What's interesting is that when you take a look at this forecast from RE/MAX, is that rising interest rates don't seem to be a factor at all, with fast rising regions still growing at a breakneck pace. Turning our attention to Western Canada, Calgary and Edmonton became stellar markets in 2021, and that's expected to be the case in 2022. This is due to intensified demand coming from home buyers migrating out of Ontario and British Columbia due to low supply. Cities such as Victoria, Nanaimo, Kelowna in BC, and Regina in Saskatchewan also saw a boost in demand, especially from home buyers coming out of Ontario looking for more affordability. Based on this report, house prices in Canada are expected to go up in 2022. And you can back that up with macroeconomic factors such as interprovincial migration continuing in many regions and a short supply of homes in those areas pushing prices up. you can argue that this forecast for price increases kind of makes sense. It simply can't be overstated enough how strong the housing market was in 2021. 95% of markets are considered to be seller's territory. I honestly am running out of words to describe how crazy this housing market is. In fact, let me know in the comments, how would you describe Canada's hot housing market? As a constant reminder on this channel, when you see numbers that seem a little out there, you have to understand the source of the information and the bias that comes with it. RE/MAX is a real estate brokerage firm. They make money when there are real estate transactions, and they make a ton of money when you have a hot property market. So of course they have a bias to show you a growing forecast, which means more business for real estate agents and their firms. Another trend I have a feeling will continue is interprovincial migration, where investors and homeowners are looking for more affordable places to set up home and shop. The ability to work from home on a full-time basis during COVID-19 has given home buyers that flexibility to shop for a home in different places. Remote work has really allowed people to set up in ways that just weren't available before the pandemic. I'm even hearing of people who have moved to a different province but still hold their job in the province they left. Short supply in areas with high demand has been a key factor driving up home prices, and one that will continue to be a key factor in 2022. A perfect storm. That's the best way to describe the hot housing market that we've been seeing from across the country from coast to coast. It was driven by a combination of factors such as ultra-low interest rates and remote work allowing buyers to further stretch away from their workplace, and a demographic wave of millennial home buyers driven by FOMO entering into the market. And of course, years of underbuilding means there simply aren't enough homes available to meet this kind of demand. 2. Record price growth. When it comes to 2022, as you can see, there are multiple views. Whether you're a buyer, a seller, or a renter, it's really hard to get a peace of mind when looking at these various forecasts. The economic models forecasting 2022 don't produce anything close to a consensus. Some of these forecast models are predicting a price growth next year that will go down as one of the highest on record, while others are forecasting a rate of appreciation that will be the slowest in more than a decade. On the grim side of the spectrum, researchers see priced out home buyers falling even further behind. The supply-demand picture that we've seen so far has been our basis for a multi-year boom, and that is expected to remain intact in 2022. Buyers who can and are able to transact will continue stretching their budgets as much as possible without letting up. There won't be enough homes to satisfy all that demand next year, unless something drastic happens, like a black swan event. The good news for would-be home buyers? Among the various forecasts for 2022, some are predicting a price growth that is expected to fall back in line based on historical averages. It really comes down to which one of these scenarios that I've talked about throughout this video becomes the prevailing force in 2022. And what do these models that are predicting price deceleration have in common? They all see price growth getting hammered by rising mortgage rates. Another unknown for next year, will corporations be pushing harder next year to get staff back into the office? If the workplace is less work from home friendly next year, that could translate into fewer buyers in commuter markets. Building and buying single-family homes across Canada has been particularly strong, with products moving quickly and prices continuously rising faster. While the expectation is that this segment will slow down after a buying frenzy we've seen so far, real estate activity will remain strong in 2022. While no one can say with absolute certainty what 2022 will bring, it's important to understand where your information is coming from and who's providing that information. If you're listening to those that have a vested interest in real estate continuously going up, you'll likely hear that there is no way that the housing market will face a correction or a big housing crash. They'll likely point out population demographics, a decade shortage of new homes being constructed, and the state of the overall Canadian economy as factors that will keep real estate up for the long run. And on the flip side, rising mortgage rates, buyer fatigue, and higher inflation are all expected to squeeze the market in 2022. Higher mortgage rates means fewer buyers qualify for the homes they want. Meanwhile, the housing market is already overvalued. The average home in Toronto costs roughly 10 times the annual household income. And in some other parts of the country, that ratio is even higher. This has led to buyer fatigue, where buyers are saying, you know what, I'm just giving up on owning a house altogether. And declining home sales in certain parts of the country are signs of this. And finally, inflation is another major factor that can impact the housing market. Families will simply have less money to put towards a down payment or make monthly mortgage payments if the cost of travel, food, utilities is all going up even higher, because there are just less funds available to pay for everything. And the current rate of inflation, which is around 4 to 5%, is at the highest level seen since 2003. Ordinary families are being squeezed, and that will likely reduce the demand for multi-million-dollar properties. Affordability was an issue and remains an issue, even in cities where it previously wasn't a factor. Ownership costs are taking as much as 60% of household income for single detached homes, which just leaves less money available for regular day-to-day expenses. Demand to service the housing market is just taking away from everything else. Not only has COVID-19 upended the lives of millions of Canadians, it has also caused major setbacks. Thousands of people have passed away, closed borders, political unrest, closed workplaces, and economic turmoil. And of course, the Canadian real estate market has has also experienced this crisis, just in its own unique way. Thank you so much for watching. Make sure to check out all the links in the description below. Hit that like and subscribe button, hit that thanks button, and I'll talk to you in the comment section.